Hi there, welcome to Kneppy Invest and welcome to October 3rd, 2024. I'm going to refer today as the most boring day on the stock market in history, and I'm probably being a little bit over dramatic saying that. Nothing much has happened today. It's reflected in the indices, down slightly, most of them, although tech is up a little bit, and small caps are down 0.54%. But when I say boring day, I'm talking about announcements. Nothing really big came out today. In fact, I did come up with the top 5 stocks of the day, but the combined markup of these 5 companies is $60 million. The combined markup, $60 million. Yes, an average of $12 million, and those markups range from $16 million down to $6 million. Now, I'm excited to talk about these 5 companies because they are small, and I do like small companies. Now, probably a better term for these 5 companies is micro caps. Now, one company did release an Appendix 4C. So we have seen the first quarterly report released for the September quarter. So in that regard, today is quite exciting. I'm always waiting for that very first Appendix 4C. Unfortunately, the company that did release it is not a company that I'm too fond of, but because this company is the first company to release their Appendix 4C or Appendix 5B, I decided to put that company in at number 1, the top stock of the day. Now, otherwise, today. Now, not only has it been quite on the ASX, it was quite in America. Nasdaq up slightly, 0.15%. Dow Jones up 0.09%. S&P 500 up 0.01%. So again, fairly boring day, which is interesting. About it. The reason it's interesting is because of what is transpiring around the world. I thought there might be a little bit more volatility today, and even oil up slightly. Nothing much happening there. So I did read this article that I think it was in Trading Economics that oil climbs the 3rd session on Middle East crisis. Well, it didn't rise all that much. Barely a blip on the radar. In fact, oil is not in an uptrend. It's still in a downtrend. So even though there has been a little bit of lift in oil, it's still not trending higher. Well, it's not in an uptrend. It is trending higher in the very short term, but in the medium to long term, it's not trending higher. Okay, so the agenda of today's video, we'll go through the ASX today. Nothing really happened when it comes to any interesting economic news. Australia trade surplus hits 4-month high, so I suppose we can skip that. So after we have looked at the ASX today, featuring the best and worst performing sectors, indices, and also companies, we'll talk about these 5 or top 5 stocks, microcaps, combined markup, again, $60 million. Now, funnily enough, before today, I had heard of all these 5 companies. So for those who do like the microcap area, these might be interesting for you. Now, probably the only one I would be interested in buying would be the company that has come in at number 2, and in fact that company does have the highest markup. So I'll talk about that company when we get to that portion of the video. Will I have a look at any charts? I don't have any charts lined up, and if I do have time, and I expect I'll have a fair bit of time, I'll also answer or read or reply to some of your comments and questions. Okay, so let's get into the ASX today. And first thing I'll do is have a look at the best and worst performing sectors. Funny enough, just by looking at this, the XTX, XAO, and XGO, seemed like the XTX, XAO, and XGO were doing fairly similar up until midday, and then for some reason XTX did rally a little bit around lunchtime. In fact, almost right on 12 o'clock. So maybe all the traders went to lunch. Don't know. That seems like the time people would go to lunch. Anyway, let's go to the sectors. And a pretty good day for real estate. I'm assuming Goodman Group's had a pretty good day. I don't know why I wouldn't have. Goodman Group up 0.94%. I'm trying to think what else is in real estate. So Goodman Group, of course, all the REITs, that sort of thing are in real estate. That's pretty stupid, me saying I'm not sure what's in real estate, but I'm talking about the biggest companies. What are the biggest companies? And Goodman Group is by far the biggest company, markup of $72 billion. The next biggest one is Scentre Group, $18 billion, and then Stockland at $12.8 billion. So which way Goodman Group goes is going to be highly, well, Goodman Group is going to be highly influential when it comes to the real estate sector. But a lot of green here. In fact, all green. Now, there's a red one, PEXA Group, which is a little bit different than the rest of the companies. In fact, I would say PEXA Group is more tech than real estate. Do they have REA Group here? No, they don't, because it's not near the top. Okay, so real estate's had a good day. Other than that, industrials, telecommunications, and IT both up slightly, while the other sectors are all down slightly, with the discretionary coming in the bottom, down 0.36% after a negative day yesterday. And if we have a look at the indices, gold's down. In fact, gold's had a pretty nasty day, down 1.19%. And small caps had a pretty bad day as well, down 0.54%. And the ASX 20, flat. Actually, let's have a look at the ASX 20. It'd be funny if 10 companies are up, 10 companies are down. Oh, not quite. So 12 up, 8 down, which probably suggests that the bigger companies have had a bad day and the smaller companies have had a better day. So let's have a look at the ASX 20 by market cap. And in fact, the 4 biggest companies have had a good day, including BHP up 0.54%. But even though Commonwealth Bank is up slightly and NAB also up slightly, Westpac is down 1%. Not sure what's happening there. And as we go down the list, just some companies up, some companies are down. Nothing much to take away from what's happening on the markets today. Again, it's been a very boring day. Okay, so let's have a look at the best and worst performing companies on the ASX today. And we'll see some companies that are in my top 5 list, hopefully, because that would have been pretty bad makeup of the top 5 stocks if they haven't either gone up a fair bit or down a fair bit. And straight away, I can see one of the companies in my top 5 stocks. Not Chariot Corporation, Island Pharmaceuticals, up 37.5%. Pretty good turnover, 402,000 shares traded. They did release an announcement today, markup $14 million. Norada, Hydration Pharmaceuticals, and Orbital are 3 companies that have featured in my video over the last 3 days, and they've all gone on a little bit more of a rally. Let's have a look at the chart for all these 3 companies. Why not? Now, actually, what I'll do is at the end of the video, I'll look at the charts for all these 3 companies. That could be my chart portion of the video. HPC. What's the other one? OEC. So few good days in a row for some of these companies. Oh, HitIQ. HitIQ is in my top 5 stocks of the day. Share price up 21.43%. The markup of this company is $6 million, which is the smallest company in my top 5 stocks. And other than that, nothing else here. Now let's have a look by market cap. Do we see any surprises here? Sigma Healthcare, another really good day. I'm not sure why the market is getting so excited. I would say if this reverse takeover does go through, that Chemist Warehouse is going to be significantly overvalued. And I did do a little bit of work on this when this potential reverse takeover was announced to the market. And the first thing that I saw when the share price was like $1.30 was, ooh, this could be a little bit overvalued. I do like Chemist Warehouse, but there is a price at which I'm not willing to pay for shares in that company. And Sigma Healthcare is well above that particular price. Mesoblast, Avita Medical have had a good day, so pretty good day for some healthcare companies. Anything else here? I do know some viewers of this channel like HitIQ, up 6.7%. And again, London Metals have had a pretty good run as well. Might have a look at that company's chart as well. LM8. And yeah, it's been a pretty boring day. Who would have thought that? Thursday could be a boring day. Now, which doesn't bode well for tomorrow, because typically Fridays are the most boring day of the trading week, and I'm fearing tomorrow is going to be, I'm going to have scared things to talk about tomorrow, unless something bad happens in the world. Okay, let's have a look at top losers, and straight away we can see that top losers today have all fallen on fairly low turnover, so this is just noise. But we do, if we go down the list, Frontier Energy down 12%. Pretty big turnover. And Mithril, Silver and Gold. That's another chart I can look at. Share price of that company had rallied a fair bit. Down 11.9%. 5E Advanced Materials had a pretty good day yesterday. Now a down day today. And Siri Resources had a good day yesterday, down day today. BrainChip, good day yesterday, down day today. And Biome, down 10%. I'm going to have a look at the chart for that one as well. Down 9% after they did release a trading update yesterday. Or was it the first quarter numbers or something? And it sounded like the market did like it. Now let's have a look at the top losers by market cap. Pilbara down, New Hope down, Guzmani Gomez. Now I did read that Guzmani Gomez, there was a downgrade by someone. Funny enough, in Capital Brief, on the right-hand side, they have a latest news section. And it seems like companies are rallying or dropping just because of downgrades or upgrades by brokers. So, for instance, Collins Food shares rise on Goldman Sachs buy rating. I still don't understand why people will buy or sell based on these recommendations. I still don't understand it. Ingenia shares lift as Morningstar boosts its valuation. Arcadium Lithium shares rise as Morgans gives ad rating. And here we have Gomez shares drop after sell rating for Goldman Sachs. Anyway, so that's why Gomez is down. And yep, Star Entertainment Group down again. Appen down, bit of profit taking probably. 29 Metals, I'm pretty sure that had a pretty good day yesterday. Novonix had a pretty good day yesterday as well. In fact, Novonix has been on a run just like BrainChip, and seems like share price is being, pulling back, which is understandable. In fact, what I'll do is I'll have a look at both of those charts as well. Well, I've actually lined up a fair few charts now. That's about 8. Okay, so let's get to the top 5 stocks of the day. And apart from the top 5 stocks of the day, there's nothing much else to talk about. I was possibly going to look at another company, but I'm not. So we'll start off with a company called Rent Australia. I think it's called Rent Australia. No, rent.com.au. A company that helps renters do stuff. It's in the name, rent.com.au. Now, this company, share price up 5.26%. Now, it might seem a lot, but it's only up 0.1 cent. So it's just, I wouldn't say noise. Now, volume is 1.5 million. And that is significantly higher than we've seen over the last week, but it's not substantially higher. In fact, there was 1.5 million shares traded on the 25th of September, and the share price on that day went up 10.5%. And then 2 days later, share price dropped 9.5%. So you can see the share price going up and down a fair bit just because of where the share price is, 2 cents. Now, this company did release a trading update. So trading update, RentPay exceeds 10,000 active customers. Now, in this sort of company, and I'm pretty sure rent.com.au is not free cash flow positive or profitable. Now, I'm going to confirm that right now. I should have done this before I started recording this video. And this company does release Appendix 4C, and we will see one released in the next few weeks. So this company had receipts of customers of $900,000 in the most recent quarter, but was operating cash flow negative by $408,000. Not only for the quarter, they were operating cash flow negative for the year. Not a lot, but it's still negative, and it's still fairly low receipts. So not a lot of receipts for this company. And the other thing I like to look at is how much cash they have on hand. In fact, at the end of this quarter, so this is the July quarter or the June quarter, $213,000 of cash on hand. So this company must have done a capital raising during the past 3 months. Now, they probably answered Section 8, because they had less than 2 quarters of funding left. And here we go. The company has announced a fully underwritten entitlement issue to raise $2.52 million before cost, which will be completed by 5th of August. There you go. So they have raised money after this particular Appendix 4C. So this company is still burning through cash, still not profitable. Cash receipts of only $900,000. But this company is, well, I suppose their customers are increasing. And that's the whole point of this particular announcement. Nothing to do with financials. It's just that they have now 10,000 active RentPay customers as at 30 September, 23% growth. Largest quarterly growth in active RentPay users, 1,878. Sales pipeline remains strong with rent rolls, well over 4,000 pending onboarding. New RentPay pricing strategy. Total payments processed through RentPay platform now exceeds 336 million. So nothing to do with cash receipts or the company becoming operating cash flow positive or even profitable. It's just that they are increasing their customer base. Another thing I like to see here is, what do they actually do? The only thing I knew about this company is they just help renters. So they have Rent Check, Rent Bond, Rent Connect, Rent a Resume, and Rent Pay. So if you are a renter, maybe this company can help you. For instance, Rent Check is an easy way for a renter to verify their ID. I'm not sure if a renter needs to verify their ID because they should know who they are. But anyway, it can also be used to check for any reported breaches in their tenancy history, giving them an edge on their application. Interesting. Now, this company does have a small market cap, $15 million, but it is the second largest in my top 5 stocks today. So let's have a look at the chart. And this is also a company that, who bought some shares? I was going to, yeah, what's his name? I forget his name. Anyway, he bought some shares in this company many, many years ago. And the chart, straight away, doesn't interest me at all. There was a little bit of interest in this company back in, say, February, March. Share price started to increase. And there was a bit of an increase in volume as well. But you can just see what happened. The interest in this company died away. Share price pulled all the way back to where it started. Not sure what was the catalyst behind that, but we didn't see any massive increase in volume. And if we have a look at the weekly chart, I'd have a feeling this is not going to look good. Oh, a lot of excitement in this company back in 2021. That's when that guy bought some shares, more than likely, 1st of February. What was his name? Can't believe I forget his name. I'm terrible. I am terrible. The guy from Megaport and that sort of thing. You know who I'm talking about. When was that? 1st of 2021? I'm trying to see. The share price went bananas in February, first week of February 2021. And share placement to strategic investor. And I'm just going to, Bevan Slattery. Can't believe it. Bevan Slattery. There we go. So, so strategic investment into rent.com.au, showing technology entrepreneur Bevan Slattery leads investment into this company, placement of 55 million shares at 5 cents, raising $2.75 million. Share price has fallen from 5 cents down to 2 cents. And you can see a lot of interest in this company when that announcement was made. In fact, the share price went all the way up to about 40 cents. So I can see just because an important or strategic investor has an interest in company doesn't mean that's going to be absolutely beneficial for the company in the long term. Here we have a case where, Bevan Slattery seemingly has made a bad choice. Although he might have bought some shares at 5 cents and he should have sold at like 30 cents, taking profits straight away. Anyway, share price, the chart just doesn't look good at all. Nothing of interest in this particular chart. Anyway, so that's rent.com.au coming in at number 5. Coming in at number 4, we have HitIQ. This is the smallest company within the top 5 stocks, coming in at a market cap of $6 million. Share price up 57%. That was a little bit unexpected. I'm pretty sure it wasn't up that much when I had a look, or we had a look at. So maybe the share price has gone a little bit of a rally in the last little bit. Share price is only up 21% 20 minutes ago. So in the last 20 minutes, the share price has gone from 1.7 cents to 2.2 cents. So possibly this company deserves to be higher on this list. Now, in saying that, the reason why the market has got excited is because of a reason I don't usually would get excited about. They have appointed a new executive chairman. This guy is named Earl Eddings. Hands up, who's heard of Earl Eddings? I actually have heard of Earl Eddings. He's I'm going to open up this announcement because he was the chairman of the ACB, Australian Cricket Board. I'm pretty sure he had a role with the International Cricket Board as well. And he might have had a few other roles, but I just remember him as his ACB role. So let's have a look at Earl Eddings' background, which has got the market excited about HitIQ. I'm not even sure how to pronounce this company. Now, this company deals with brain injuries or brain care or something like that, particularly when it comes to sport. So there's those contact sports like rugby league, AFL, rugby union, probably Australian football, even football or soccer, because that does actually have brain trauma when people hit the ball. Yes, that does actually cause brain trauma. So this is what that company is doing. Not sure exactly what they're doing, but that's what they're involved in. So let's open up this particular announcement just to have get more insight into Earl Eddings. And I'm pretty sure they will give him, or they'll tell us his background. The other thing is initial director's interest notice. So I'm pretty sure that's nothing. Okay. So they announced the appointment of former Cricket Australia chair Earl Eddings as executive chairman. He was chairman and director of Cricket Australia. Is that the ACB, Australian Cricket Board? Yeah, I suppose it is. From 2008 to 2021, director of Cricket Victoria. We won't blame him for that. From 2006 to 2015, held the position of deputy chairman from 2008 and 2015. He was also the director of Kerry Packer Foundation and director of the International Cricket Council. Okay, I thought it was the International Cricket Board, but in ICC. Is there a difference? I'm just making stuff up. Anyway, he's a fellow of the Governance Institute of Australia and graduate of the AICD. Previously, he was managing director of WSP Australia Pacific and managing director of ASX-listed Greencap before selling to Wesfarmers. I don't know anything about Greencap. And yeah, so he has a good resume. In sport, maybe cricket, it's not the full contact type of sport. But anyway, I'm just going to have a look how much he's getting paid. Fair bit. I'm just going to have a look at the about section. So this company has an evidence-based brain care solution company deploying world-class technologies. Their solutions include a sensor-enabled mouth guard to an AI-enabled data analytics interface and best-in-class return-to-play work support software. So this sort of technology should become more popular as we move through the next decade or so. We want to protect the brains of all our sports people. Their customers include the AFL, EPL, English Premier League, and NRL, along with numerous other teams in a variety of sporting codes. Anyway, so let's have a look at the chart for HitIQ. So obviously this guy, Eddie Eddings, is highly liked among the, I would have said the investing community, maybe the sporting community. Chart for all this company doesn't look good, however. So in their share price has rallied a fair bit. Well, what it's up to now, it was up to 2.2 cents. It's still in a downtrend. This is not the end of the downtrend. And to be honest with you, the volume today has been meh, sort of like today overall, has been meh. So not my favorite sort of chart. And if you look at the weekly chart for this company, share price in its first week of trading back in 2021 went to a high of 21 cents and now is 2 cents. So share price has dropped 90% since that high. Okay, so that's that company. And to be honest with you, this is not the sort of announcement that would excite me to take a position in a company at all. If he was a CEO or something, a really exciting CEO and appointment, maybe, but other than that, no. Okay, that's HitIQ coming in number 4. Coming in number 3, we have Island Pharmaceuticals. This is a company I have heard of about, but don't know or knew anything about. So Island Pharmaceuticals share price up 44%. Now, funny enough, they did complete a placement, 3.1 million placement, but they also released Phase 2A Protect clinical trial dosed and investor webinar. So this is probably the first time I've ever had a look at Island Pharmaceuticals. Now, this is only Phase 2. This is a story stock. There's without doubt this is a story stock. I would say HitIQ is a story stock. I even would say rent.com.au is still a story stock. They've yet to prove their model. They've yet to prove they can be profitable and operating cash flow positive. So all these microcaps are story stocks. But by far the biggest story stock of these, when I say biggest, I mean at least those other companies, not even sure if HitIQ does, definitely Rent Australia or rent.com.au has receipts. They're selling something. Island Pharmaceuticals is not selling anything. It's all about promise and potential. So I think in this sort of company, particularly if you own it for the long term, you have to know the science about what they're doing. And I have no idea what they're doing. Now, they're talking about Ireland has dosed subjects in the prophylactic arm of its phase 2A PROTECT clinical trial. I have no idea. Yeah, no idea. They just mentioned US Army here. What's interesting? And dengue virus. So maybe they're doing something with dengue virus. So let's have a look at the about section first. Drug repurposing company focus on areas of unmet need for antiviral therapeutics to address infectious diseases. Our lead asset is ILA 101, a drug with well-established safety profile being repurposed for the prevention and treatment of dengue fever and other mosquito or vector-borne diseases. If ILA 101 achieves FDA approval and other criteria met, Ireland may be eligible to obtain a priority review voucher at the time of FDA approval. This means that as well as getting approval to manufacture and sell this particular product, a priority review voucher would permit Ireland to expedite the FDA approval. There you go. And so what's this about? They're just dosing some subjects. That's about it. The attenuated strain of dengue will be administered to subjects on 4th of October. This is definitely not the sort of announcement that would get me excited. It's still well away from that particular stage, but the market has got excited. So when the market is excited, I won't say I also get excited, but I will have a look at the chart, that sort of thing. Is this an opportunity to buy this particular company, or is this a breakout? That's the main thing I'm looking for here. Is this a breakout? And funnily enough, this company listed on the ASX back in 2021, just like that previous company, which was HitIQ. And the share price, well, the chart looks fairly similar. Share price did reach a high of 62 cents in this first week of trading and has been in a downtrend ever since. However, the 1 week candlestick looks pretty good. So let's have a look at the daily chart. And the reason it looks good is because of what's happened today. Share price up, was it 43% or something? Now, there has been a little bit of selling, which is understandable because the share price has dropped a fair bit since they listed. A really good volume. Now, the thing I like about this chart is this company did see a bit of an increase in volume in February, and that increase in volume was sustained through the next 5 months or so. So it's a very subtle increase in volume, but it's definitely there. And really, it seems like that is the bottom. That is sort of an indication the share price is going to go sideways at least. That increase in volume is telling us that some people out there are thinking, oh, there's some good value in this company at these prices. And then the company released an announcement today. So not, I was going to say not a breakout, but it's very close to a breakout. So high volume, share price at least a 3-month high. In fact, it's probably, it's a 1-year high. It's actually more than a 1-year high. The only thing against it, in terms of my definition for a breakout, there's no positive financial news. Maybe a positive announcement, but no positive financial news underpinning this particular increase in interest in the company. The reason I look for positive financial news is because if it's really good positive financial news, that can really support the share price going on a run. This sort of announcement, the interest in Ireland Pharmaceuticals could die out fairly quickly, but if it's a positive financial news, you could see interest in the company being maintained for 6 months. That is the research I've done. I think the reason behind that is institutions and fund managers have a closer look at the company when they do release really good financial numbers, so a profit upgrade, that sort of thing, and the benefits can last for up to 6 months at least. But probably you won't see that with this type of announcement. But because of the volume, because the share price has reached at least a 1-year high, I'm going to put this into my high volume spec watch list. I haven't looked at this watch list for a while, and that's not the point. The point of this watch list is trying to find a pattern. What breakouts will work? Is there any signal we can look for to see whether a breakout will be, will continue, the share price will continue to go up? Will be, what's the word? Will be, you won't see significant pullback, that sort of thing. Will be, there is a word for it I'm looking for, but I can't find it in my brain right now. But anyway, this by far is the better looking chart out of the first 3 we have looked at today. Ireland Pharmaceuticals. And that's coming in number 3. Coming in number 2 is probably the company I would be the most interested in, because I'm not sure, but I think there is potential. This company is bordering on profitability and might be operating cash flow positive. And I'm going to confirm that. Maybe not confirm, or we could. Let's have a look at the most recent Appendix 4E. They also released a results presentation. So let's have a look. Were they profitable? This company sells lighting. If someone asks me what this company does, I'll just say they sell lighting. I'd say they're a little bit more complex than that. And anyway, this company is profitable. Revenue up 43%, nice growth to 24 million, and profit of 632,000. Now, because of what they do, I would assume this company has fairly low margins, and that's sort of implied. Well, they have a dividend too. I didn't know that. They have a dividend, final dividend of 1 cent. This company is a dividend-paying company. Okay, and there it is, dividend distribution, FOS. Okay, so this company did release an update, a trading update, and this is my favorite type of announcement. Share price is up 7% today. So obviously the market has liked it. My favorite type of announcement. What I found really interesting here is they've compared the first quarter sales, orders on hand, and active quotes to the first quarter last year. So that's exactly what they should do. Previous corresponding period, there could be seasonality, so that's exactly what you want to do. But they also provided in the next page a little bit of context, because when you look at some of these increase in numbers, so for instance, sales has increased 194% from 2.8 million to 8.3 million. My first thought was, wow, is something happening here? Orders on hand increased 93% from 4.7 to 9.1 million, and active quotes increased for 35% from 81 million to 110 million. Now, I'm going to look at the About section first or second. So this is a founder-led manufacturer. So those investors who love founder-led companies, this could be for you. Manufacturer and distributor of commercial, industrial, and architectural lighting solution. They own 17 brands and 2 manufacturing facilities located in Brisbane and Sydney. So, yeah, this is a company about lighting. They sell lights. Well, I suppose they manufacture and sell lights. And they own quite a few brands. I didn't know that. Anyway, so here's a bit of context. This is the sales over the past 2 years. So even though they were doing it right by comparing the previous corresponding period, they were comparing the worst quarter the company's had to the best quarter. So if you do look at the sales over the last 4 quarters, it's sort of gone, it has increased, but there was just a massive increase from the first quarter last year to the second quarter. Now, funny enough, if I just had a look at this without looking at the first quarter this year, I would have said there is a possibility, a very small sample size, that the first quarter is their worst quarter. We saw it in 2023 and 2024. That was their worst quarter. So there is potential that the first quarter is their worst quarter, and the next few quarters you're going to see sales actually increase from where they are now. But they did mention somewhere here, if I can find it here. Oh, yeah, the second paragraph. While first quarter sales benefited from the favorable timing of some project deliveries during the quarter, sales have rebased higher over the past 12 months, and recent trading remains positive. So I'd say, just based off that wording, that there is probably not seasonality when it comes to this company. And to be honest with you, when it comes to lighting, is there any seasonality? Do companies decide to buy more lighting in the winter or improve their lighting in winter? I don't know. Anyway, so this is a company, has a market cap of $16 million, fairly small company, but it's profitable. And it's also a dividend-paying company, also founder-led. Now, my one biggest problem about this company is the chart. And I actually did do a video on this company a few years ago, I believe. There it is, FOS Capital. Not sure when that was. Small, profitable, and cheap. There we go. Don't know when that was. Anyway, probably my biggest problem. Actually, the chart looks much better now. So just like some of the other companies on this list, FOS Capital hasn't been around for very long. So they listed in the middle of 2021, and in fact, today, share price has reached an all-time high. There you go. Share price today has reached an all-time high. You could have bought this company at 14 cents in the middle of 2023, so about 1 year ago. You could have bought this company for 14 cents and doubled your money since then. I do actually like this chart because the share price is in an uptrend. The company has released a favorable announcement, but you're going to see a lot of volatility. And because shares in this company are illiquidly traded, you could see the share price drop all the way back down to 20 cents on not much traded. And to be honest with you, not high volume today. Let me confirm that. So only 57,000 shares traded on 8 trades. If we have a look at the trade history, you can see some days very little is traded, and in fact, some days no shares are traded at all. So this is a liquidly traded company, but they are growing. Company is profitable, and they're also a dividend-paying company as well. So that's Foss Capital coming in at number 2. Coming in number 1, simply because they did release an Appendix 4C, is Zoono Group. Sell cleaning stuff. They were high. They really benefited from COVID-19. In fact, one of the things I do when a company releases their Appendix 4C, if they have cash receipts, is I actually do put the cash receipts into a table or into a spreadsheet. And this is Zoono's cash receipts history going back to 2017. And in fact, what I'm going to do is just increase the font of those numbers if I can. Where is it? It's just so you can see the numbers a little bit more. There we go. And I'll just bold it too. You see a bit of overlap right now, but the main thing is back in late 2020 into start 2021, this company had significant receipts. In fact, $20 million of receipts in the June quarter 2020, just because of the products they were selling. And unfortunately for Zoono, a lot of people who were buying their cleaning products bought way too much. And that's why the receipts dropped from $19.8 million all the way down to less than $1 million. And it seems like they didn't really, or maybe they thought the good times will continue. So they definitely were cash flow positive during that period. Seems like they didn't really prepare for the future. Maybe they thought the good times were going to roll on and they spent a fair bit of money. Okay, so the company did release an Appendix 4C today. And this is exciting. I always love these Appendix 4Cs just to see how a company is performing. And I always focus on the very first Appendix 4C. Most of the time, it's usually a company that is operating cash flow positive and growing, because those sort of companies want to release their numbers as soon as possible or as quick as possible. Okay, so let's have a look at Zoono's Appendix 4C. Now, the main thing I look at, and the first thing I always look at, is the cash flow statement. Whoops, I'm supposed to increase the font. I don't look at the commentary unless I really want to or need to. And the first thing I do is, well, the first thing to note here is they're a New Zealand-based company. That's why these numbers are in New Zealand dollars, but that's okay. It's okay. Receipts to customers, 601,000. Now, this is the first quarter for the financial year, so we can't see how they've performed so far this year because, well, we can, but it's only one quarter. I do like the last quarter of the year because we can see the current quarter plus year-to-date 12 months. But anyway, the main thing is receipts to customers, 601,000. Now, the last few quarters, receipts have been lower. This is actually the best quarter this company has experienced for over a year. In the June quarter 2023, they had $1.3 million receipts. And now it's halved since then, but it's still the best quarter this company has seen in over a year. And that could be the reason why the share price is up. But in saying that, the company is operating cash flow positive or negative, 346,000. Which you would expect. Receipts to customers 601 is fairly low. And in fact, administration and corporate costs is more than the cash receipts. And cash on hand, the other thing next thing I look at, that's sort of a lie. I also look at cash flows from investing activities. So capital expenditure, property, plant, equipment, nothing at all there. Next thing I look at is financing activities. What's about leases? Repayment of borrowings and leases, 85,000. So nothing much happening in investing and financing activities. It's all about operations. So if this company could become operating cash flow positive, more than likely they will be free cash flow positive as well. So the next thing I look at is cash on hand. Now, currently they have $1.56 million of cash on hand. So they're okay at this point in time, unless they continue to burn cash over the next few years. And if so, they'd have to raise capital or go into debt. And talking about debt, they have no debt, and they have 4.51 quarters of funding left, so they don't have to answer Section 8.6. Okay, so I would have preferred if this company was operating cash flow positive, but they're not. and that means I move on to the next company. I won't have a closer look at this company at all. Now, I'm pretty sure they have decreased their costs. So that's one thing they're doing. They are decreasing costs. So let's have a look at the commentary. I should have done that after I looked at Appendix 4C. Let's just have a look at the bullet points here. Cash receipts for the quarter up to 601,000. Significant further reduction in net cash operating costs. Yeah, the decrease in net costs for the quarter from the previous quarter. Strong interest generated in shelf life extension technology, with 21 companies already going to trials, including well-known household names. Not sure what all that is about. Maybe the company is preparing themselves, diversifying themselves, that sort of thing. Shelf life extension project. So probably something to do with their technology. So if you want to have a look at the about section, global biotech company that develops, manufactures, and distributes a suite of scientifically validated, long-lasting, and environmentally friendly antimicrobial solutions. So cleaning products. And that's probably all. They produce sprays, wipes, and foams suited for skincare, surface sanitizers, and mold remediation treatments. Based on the Zoono molecule, which I know nothing about. And finally, the chart. And if you compare the cash receipts to the chart, you'll see there is a bit of a correlation there when we look at this particular chart. Well, let's have a look at the weekly chart first. And look at that. Share price of this company went to a high of $2.50 back in the middle of 2020. That was the quarter where they had really good cash receipts and they were profitable and generating a fair bit of cash. And since then, share price has dropped from, $2.50 all the way down to 2.5 cents. So share price has dropped 99% since that high. Now, I did notice looking at the daily chart, there was a nice little run up in the share price not that long ago. Back in March, share price went from 2.5 cents to 10 cents and then fell all the way back. And there was a bit of volume. There was a bit of volume here, and then the volume completely collapsed as the share price collapsed as well. So there was no support in the share price as it fell until the day the share price fell back to where it started from. That's when we started to see volume, and that was the support. That volume. People saw some value in this company, and that was a good sign the share price had reached the bottom, or near bottom anyway. Anyway, so pretty ugly looking chart, and I have zero interest in this company at this point in time, but they are the first company to release Appendix 4C, and they do deserve a little bit of recognition, in my opinion. Okay, so let's have a look at a few of your comments. Mr. Chokes, well, you know that name. First thing I thought of was South Park. If you do know South Park, you would know Chokes. Anyway, I'm not going to go further on that line of thinking. Anyway, he says, or she says, I'm pretty sure it's a Mr. because it's in the name. Hi, Kneppy, is it possible for you to review chart for Tyro payments? I am not seeing any reason why share price is keep drifting lower, or share price is drifting lower. Okay. One of the reasons why share price of a company might drift lower is because there's no interest in the company. You need a bit of enthusiasm from the buyers to help share price run up. If you have no enthusiasm or no one wanting to buy shares, in fact, the natural state is for share prices of companies to actually drift lower. It is actually the natural state. Anyway, so here's the share price of, or the chart for Tyro. And the share price has been in downtrend for a while. On occasion, you do see these little hype periods. In fact, I did put Tyro onto my watch list because when they released their results, share price popped up on that day 12%. And I thought, oh, this could be the start of a new uptrend for Tyro payments. Nope. And the reason I didn't take a position is because the share price drifted lower over the next few days, and the share price never got back up to those levels on the 26th of August. And that's actually a bad sign. And now we have seen the share price drift all the way back down to 90 cents. So again, even though that was a good result, initially a good, or seen as a good result by the market, there was no follow-on enthusiasm from the market, and the share price is just drifting lower. There's just no enthusiasm. And to be honest with you, when there's no enthusiasm from the buyers, you will see enthusiasm from the sellers because they become bored. They would look at a chart or look at the share price action in a day and go, oh, share price is drifting lower, or I might have to sell my shares in Tyro payments because share price just keeps on going lower. The main thing here is you can actually almost almost put a downtrend line here. Oh, it almost picks. Oh, it does fit perfectly, almost perfectly. So that's a downtrend line for Tyro payments. I probably personally, if you're interested in trading this, I'll just wait for this downtrend to come to an end because this is a well-defined downtrend right now. In fact, the share price has hit this downtrend line quite a few times, and on one occasion got very close. In fact, let's have a look at the weekly chart. Yeah, you can just see it here, the weekly chart. So there was a high on or in November at about $1.80, and every single time share price gets to that downtrend line, the share price pulls back. And we saw it when they released their results. Share price has pulled back from that. In fact, this sort of chart, I will stay clear of for the time being. I will just wait and just wait for the breakout. I am leaning more and more just using technical analysis because it means I will be out of this position and only be in positions that are favorable, that have a greater chance of success. At this point in time, Tyro payments, this could be the bottom, don't know. Share price could go lower from here, share price could go higher, but I'm waiting for some evidence for me to get excited. The first bit of evidence would be that downtrend line to be broken. Now, the other thing you could do is, do you think this company is a great company to invest for the long term? And is the share price at 90 cents good value? Now, if that is your thoughts and your opinion, then maybe now is a great time to buy shares in this company. But that's up to you to decide whether this company is a long-term investment. For me personally, it's more of a trading stock. Now, I could be wrong. Maybe it is a really good long-term position. Now, your Freeman talks about talking about a glorified coffee outing. So watch a video of a YouTube day trader who invited a bunch of other traders overseas for fun. I am not going to invite other people overseas. Like a glorified coffee outing, perhaps we could do something similar. I am not going to do that. Now, I am going overseas next year, but that's me going by myself. And I am a pretty much a massive introvert. And even though more than likely I would enjoy your company, I prefer to be by myself. Particularly this is a hiking holiday, by the way. And when I'm hiking, I do prefer to be by myself because I control everything. Speed we go, that sort of thing. Stewpercy. I thought I would learn how to do a DCF, just like I did. But the more I looked into it, I realized it was not worth the effort. That's exactly my sentiment. After looking at DCF done for a single company, they all came up with different values. Yes, in fact, when I used to do DCFs, I would come up with a whole range of different numbers because I just suddenly changed the inputs and then you get a totally different group of numbers. And that's when I realized you're just guessing. DCFs are just guessing. Well, it's not absolutely true. DCFs can work for companies that can grow at really consistent, predictable rates. But those sort of companies are already valued rightly or properly by the market. That's the way I look at it. So DCFs, I just see no value in them. A reverse DCF is completely different. Anyway, they were done by people far more educated than me. You have to make a lot of assumptions to get a value. And one of the things you do is actually you do a margin of safety. So you just assume that all your calculations are wrong, and then you have to put a margin of safety. And only if the share price hits your margin of safety level, that's when you take a position. And more than likely, it will never hit that level unless the market crashes. Anyway, you do have to make a lot of assumptions. One thing I was thinking of, because you have to make a lot of assumptions, you just change your inputs, and then you just get a wide range. You could get, well, fair value of this company could be anywhere between $1 and $10. And then I use a margin of safety. I'll be willing to buy this company for 50 cents, and the share price is like $6, and it never gets to 50 cents. Seems like a lot of work to come with a fair value that is probably not right. Yes, probably not right. I think you're on the right track. The chart can give you more information, and it's simply true. I like technical analysis because you get a feeling of what the market is thinking about a company. You just get a feeling, a really good feeling, and you don't have to do all this work. Now, reverse DCFs I do like because the end result when you do a reverse DCF is this company has to grow at 16% per year to justify the current valuation. And I see more value in that. Can this company grow at 16% per year to justify the current valuations. When it's in the past 10 years, it's only grown at 10% per year. Well, that seems like a lot of growth priced into the share price. I have used reverse DCFs quite a bit, and I get a lot more from reverse DCFs than just a normal DCF. Very rarely do DCFs, and more than likely, you wrote that because of my story about in the video. The person did a DCF, and they said this company is significantly overvalued, and they were wrong within a year. And when I say wrong within a year, if you listen to my story, they had the cash flow for the company in 2020 or 2033 or something like that, and within 1 year they were wrong. NVIDIA had already beaten that cash flow, and that's a problem with DCFs. Sometimes we're going to be way too conservative, and that was a massive problem. I've heard stories about people doing DCFs for Amazon and going, "Oh, this is like 20 years ago. This company's way overvalued. If you do a DCF, it's way overvalued." They just didn't realize the company could grow at significant levels over the next 20 years. Thank you, Stewpercy. Matt Tisti Yibo. It's a shame that your feed is taken over by these crypto scammers. It must be frustrating for you. So what I do in that sense is I do look at my comment section every so often, about maybe 2 or 3 times a day, looking for these crypto scammers. And then I have to block them, but they just keep on coming. So that's probably what you're talking about, because I did have to get rid of a comment. So what happens is someone writes, "Oh, I've lost a lot of money, but I did make $50,000 in crypto in the past week." And then within seconds, you get all these comments and lots of likes and all that sort of crap. And all I have to do is block them and then report them to YouTube. I'm not sure what YouTube does. Hopefully they're taking note, but it happens a lot. Hopefully I catch them before. Hopefully I've caught all of them. I think I have caught all of them. One of the dead giveaways, I'm just going to show you this. One of the dead giveaways, no, that's the wrong one. Where is it? Content. So this is channel content in YouTube Studio. One of the dead giveaways is, so this morning I looked at it, and in my video that I released yesterday, the 2nd of October, there was 22 comments. That's a dead giveaway. Dead giveaway. So usually you see 6 comments, 6, 12, 13, 6, 13, 11, 27. I think I've responded. That's the reason that's high, is because I've responded. And I'm just assuming I responded. Yeah, I've responded to all these comments. So that's a dead giveaway when all of a sudden you see 22, 25 comments, and then I go into it, and then I do what I said. Anyway, let's go back to the comment section. Oh, I was in it. No, I wasn't. No, comments. Here we go. And Sensei, Kneppy, thumbs up. Oh, thumbs up you too. Landy Lee, hi Kneppy, do you use a stock screener? If so, what settings? Also, what are your thoughts on Fenix resources? Kat, this will be the last comment of the day. Do you use stock screener? No, well, sort of. I do use a stock screener when it comes to technical analysis, not when it comes to financials, that sort of thing. And what I look for is unusual volume. So for instance, let's have a look. So I look at 20, 100-day, actually it's 25, no, I think it's 25, 100-day moving average cross. You don't get a lot of hits here, but for instance, we've had a BHP hit. Here we go. Would have had a moving average cross over there. Another one I look at is a 3-month high, 6-month high. Probably my favorite one is unusual volume. Now, I've actually changed the settings in this. Originally, I was just looking for unusual volume for companies that were at a 3-month high, but I've changed that now to just unusual volume. So, for instance, 166 matches, Pilbara Minerals, unusual volume. You can see that massive volume coming in today. Share price is down. Sigma Healthcare, unusual volume, 3 days in a row for that company. I'm not sure why the market is getting so excited. Well, I sort of do, but I think the market is getting a little bit too excited. Mesoblast, unusual volume coming here, up 8.43%. In fact, this chart is starting to look pretty good, and the volume has increased today. And Bravura. So Bravura's had 2 unusual volume days in a row. So what I'm looking for here is I'm looking for quite a few unusual volume days. For instance, I do have an unusual volume rise watch list that I just started. So there's probably a good example here. What's a good example here? IMB, Intelligent Monitoring Systems. You can see actually here, very low volume from January 2024 all the way through to May. Very low volume. Share price really did nothing. Then all of a sudden the volume started to increase. And then we started to see spikes in volume. And over the last week or so, we have seen a really good run of high volume days for Intelligent Monitoring Group, and the share price has rallied. That is telling me something. That is telling me there's someone is interested in this company, and what I'm looking for is institutions and fund managers taking positions, because ultimately you get more and more fund managers or institutions interested in your company, the share price will keep on rising. And what are they looking for? They're looking for financials. That's what they're looking for. Good financial statements from the company, growth, return on equity, all those sort of things. So just by looking at the chart and volume, you can see whether institutions and fund managers are becoming interested in the company. And I would say that is possibly what is happening with Intelligent Monitoring Group. I've got some other companies here like Centurus Metals. I just noticed there was a nice little increase in volume yesterday, but very low volume today. But yeah, what I'm looking for here is a run of really high volume. Another good example of this is a company I own or trading right now, SRG Global. And this is a great example of really, we've seen a really good increase in volume over the past few months. That's without doubt. Now, some days volume is low, but really good increase in volume. In fact, if you look at the weekly chart, you'll be able to see that perfectly. So the weekly chart, 2021, 2022, 2023 wasn't great volume, but over the past, say, 2 or 3 months, we've seen an increase in volume. That's exactly what I'm looking for. So that's why I use or look at unusual volume, and why I do like the unusual volume screener, because volume and price action can tell you a lot. The other thing I'm looking for is, I think Lark might be showing that right now. So what I'm looking for here is, before this massive spike in volume on the 10th of July, there was no volume for Lark. Share price drifting lower, no enthusiasm for the buyers. Then all of a sudden, massive volume coming in one day. It could be just one trade. But since then, we have seen a nice increase in volume. And corresponding to that nice increase in volume, share price, instead of drifting lower, is now drifting higher. That's a good sign. So Lark Distilling is actually onto my watch list just because of that. I would prefer the share price going sideways. That's a really good sign, because eventually I think the share price in this sort of situation will start to pop up, will start to increase. But Lark Distilling is now onto my watch list because what I've seen over the past 3 or 4 months with the volume and the price action. And this is exactly what I'm looking for. These spikes in volume and then maintaining good volume after that. And that is going to be it for, what are your thoughts on Fenix Resources? I have owned Fenix Resources on and off over the last 3 or 4 years, maybe even longer than that. Originally, it was just a trading stock. I like Fenix a little bit more because they're way more diversified. They used to be just an iron ore miner, but they have diversified into like that trucking company, also the warehouse, or whatever they have in the port there. And I said to myself, if the share price falls below 24 cents, I'll take a position. Share price got to 24 cents, but did not fall below it. So I do like this company for it's a good company. Maybe not a good company. It's a mining company, and I would never consider any mining company to be high quality, but I think there is value, or could be value for this in this company at a share price below 24 cents. Now, in saying that, if the price of iron ore collapses, the share price of this company is going to collapse. So you have to remember that this company's financial performance, share price performance, is highly influenced by the price of iron ore. So if you think iron ore is going to collapse, maybe China's going to see some serious issues. If you do think that, then this is not the company for you. Neither is BHP, Fortescue, or Rio Tinto, or any other iron ore company. And if that does happen, Australia is pretty screwed. Okay, so that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.